The business environment today is changing dramatically. Big American and global corporations are facing a number of uncertainties: wages, inflation, and the possibility of trade wars. As a result, they're looking to diversify the supply chain.
There's also the fact that labor costs in China have been increasing, and it's kind of part of a bigger trend of nearshoring and reshoring that has really kind of moved to the forefront since President Trump came on the political scene about 10 years ago.
Countries in the emerging world with lower wages, better corporate taxation, and skilled labor are primed to benefit.
For the past 20 years, foreign direct investment has been focused on China. In fact, as recently as 2019, China accounted for nearly 40% of foreign investment flowing into Asia. However, due to potential tariffs and regulatory uncertainties, corporations are now seeking alternative manufacturing locations.
One of the big beneficiaries of this so-called China Plus One realignment is Vietnam. Vietnam has incredibly attractive labor costs. The minimum manufacturing wage is less than half than in China. In addition, industrial land is very attractive and plentiful. Samsung has been committed to Vietnam for many years. They first started investing in 2008. Today, they have well over $22 billion invested in the country. They recently announced an additional $1.8 billion investment. They have over 6 manufacturing facilities, 1 research and development, and 1 sales center.
Foxconn, Apple's manufacturing partner, has invested over $3 billion in Vietnam. They've also ramped up production in India, which is now becoming the main hub for manufacturing the latest iPhones.
Most of the iPhone 16 production now is being based in India instead of China, and there are a few advantages that Apple can reap from that, and one of them is profit margins have moved higher. They're about 60% for the iPhone 16, which is just a bit higher than older models. That's partly a function of the cheaper labor costs in India, and also the fact that the economy is a little bit more open. They don't have a lot of the onerous regulations and that China has sort of become notorious for.
Another region that's gaining attention for manufacturing is Eastern Europe, often referred to as the New China.
Just to give you a reference, the wages in Eastern Europe are anywhere between 10 to 50% what they are in Western Europe. The population is highly skilled across most of the countries. Microsoft, for example, recently announced an additional $1 billion investment in their first data center in the region. The management visiting Poland called it an opportunity to become the new AI valley in Europe.
Other companies that have moved production to Poland include Raytheon, Intel. A lot of these huge multinational companies are all focusing on Eastern Europe because labor costs are cheaper, the regulatory hurdles are less steep. Just generally, it's a more amenable business environment than China.
Other countries like Argentina and Mexico are also benefiting. Argentina's President Milei is offering major incentives for large investments in select industries. Mexico saw a record $39 billion in foreign investment in 2024, up about 8% compared to 2023. However, diversifying away from China comes with risks.
The currency risk is probably the most notable risk for dollar-based investors. These countries have fluctuating exchange rates, and those could be unpredictable.
China is also sort of a known quantity at this point, so another risk to keep in mind is the fact that building new factories and shifting production is a really time-consuming, really labor-intensive and capital-intensive process. So by the time companies have completed this process, you just don't know what the business environment is going to look like. So it's just something that I think companies are trying to keep in mind.